Viewers, COVID has receded, but the war continues. Last year was an annus horribilis for the global economy. It was thought that the world's largest economy would slip into recession in 2023. But now a section of economists have revised their pessimistic outlook for the global economy. These experts don't think that a recession is looming in the US or across the Eurozone economies. There are broadly four factors. The first, inflation fueled by supply-side shocks has now fallen off its historic highs and is trending downwards. So that's one reason for this optimism. The other is that the world's second largest economy, China, has seen its growth prospects rise after it opened to business following a decision to revise its zero-COVID policy. That, of course, viewers, came after some major protests in China and, of course, civil strife. The third important factor, employment levels that were expected to rise post the jump in inflation and central banks hiking interest rate payments haven't. So that's been quite a relief for those who look at the global economy and project trends outwards from it. The last related point is that stable employment rates have meant that in US and some other big economies, demand has been fairly robust. Now, while there's some debate over the prospects of the global economy, there's very little debate, viewers, about the strength of the Indian economy. India has been widely touted as a global bright spot among the world's largest economies. This is a considerable achievement for a country that has broken into the top 5 in the GDP sweepstakes. But viewers, the question now isn't whether India will grow, but whether it is best placed to maximize the opportunities and grow exponentially. That's what we will ask our panel of some of India's most successful corporate czars today. And let's open this up. We have with us some of the biggest names, and I want to begin with Sanjiv Bajaj, CIA President, Chairman and MD, Bajaj Finserv Limited. Mr. Bajaj, thank you for speaking to me here on Times Now. I want to ask you a very straightforward question. Is India poised to benefit from improving global sentiments, or do you still feel that there are challenges?
Rahul, you actually started off by presenting a very good overall picture of where the world and India stands today. The only one additional point I would add to that is the uncertainties that were caused due to China's zero-COVID policy and the other political uncertainties have created this need for all large global companies to have additional manufacturing bases. And India is one strong place that has both the capacity and the capability to be able to do so. So the short answer to you is that yes, this opportunity stands true for India for the next decade and more. It doesn't automatically mean that it is coming to us. We need to continue working towards it. We need to ensure that we create a stable macroeconomic situation in our country with inflation in control, with rates coming down, which can attract this investment for them to see a reasonable return over a period of time. There are a few other points which I'm sure we'll talk about.
Okay. We got an overview. How is a weakening rupee affecting India's competitiveness? If you were really looking at the micro now, how do we assess that? Sanjeev Puri, Vice President of CIA, Chairman and MD, ITC Limited. I'll put that question to you. Weakening rupee, is it a problem? I know that the currency has performed better than others across the globe. Some of the prominent economies have been badly hit against the dollar. But there is a concern here, too, that India's competitiveness might actually take a hit because of higher input costs, this, that, the other, and a fuel bill.
See? Yeah, so Rahul, there are two parts of this puzzle. One is that the aspect you alluded to, how does it impact competitiveness as compared to competing origins where their currencies do not, where their currencies depreciate more. That's one part of it. Yeah. The second part is that the moment the rupee weakens, the cost of whatever is imported in India goes up. So there is an indexation to inflation, right? So I think it's a fine balancing between the two that needs to be done. So that's the approach we see the central bank has been taking and has been very astutely handling it. So we certainly need to do that balance, given that a lot of our energy is imported. Right? A lot of our edible oils are imported. Right? So the fine balance is really what is required. So that's the way I would put it. Yeah.
But are you seeing an impact of this weakening rupee right now across industry? That's really what I'm trying to get out of you.
So I would say that, if you look at the trajectory of exports from India, right? I won't say that it is not impacting, it will, but if you look at the larger picture, if you look at the trajectory of exports, when has exports started to post muted growth or degrowth? It is an impact of the global slowdown. That's right. Really what has impacted it. I think the moment the economies revive, I think exports will come back. Exports will come back, right? So that's the way I view it.
Let's get deeper into this. Chandrajit Banerjee, India, of course, a global bright spot, but foreign investors have pulled out at least 1.5 crore from Indian markets. Now, how do you evaluate the shift in investor sentiment? So, you have buoyancy with regards to outlook, and that buoyancy is coming from some of the leading experts. But investor sentiment seems to be slightly on the tepid side.
Yes, Rahul. I think the answer to your question lies to a great extent in the introductory remarks that you really gave to set the agenda for this discussion. I would think, if you really look at, the history of the FIIs, they come and go. But today, I think if you really look at the global sentiments that we captured in Davos, and we are really looking, when the world is looking at where stability is, I think, and with the interest arbitrage with the Fed and India, that's really becoming lesser. I would think that we are getting into a situation where I see India becoming a lot of money coming into India, and number one, because India is a bright spot, sweet spot, as you described. And I find that the confidence in the reform system, the confidence in the demand that India will bring up, the confidence also amongst some of the states of India which are doing very well. The confidence also that Indian the focus that we are having on both the capex as well as the infrastructure spend, all of that is actually resulting, and the ease of doing business is resulting to a lot of attraction of global capital.
Okay, that's interesting, because we are talking about sentiment right now. Dinesh, you, of course, President-designate CI and Executive Vice President of TVS Supply Chain Solutions. We are talking about sentiment. Indian stock indices have been struggling in the red zone, as you know. What is subduing sentiment? Is it really the external environment, or is there some weakness that is apprehended, perhaps, about the Indian economy? Underlying weakness, which we're not or perhaps glossing over? I don't know.
Thanks, Rahul. I think the way I would look at it is, again, going back to the basic statement which you started with. I think it is the global economy which is reflective of what is happening from a stock market perception. I think stock market, in my mind, should not be the real indicator of what is happening at the ground level. And at the ground level, like I think CB already mentioned, you see many of the global names actually committing to make long-term investments in India, both from a manufacturing perspective and from, I would call it, sourcing perspective. So the way I would look at it is, it's a lead and lag indicator and maybe short-term indicators which we shouldn't worry too much about from a stock market perspective. I would go by the ground level reality and continue to focus on making sure that continues to expand at a much faster rate. And I'm sure you will see more global money coming into the stock market. And last but not the least, I think short-term changes with a few months here and there I don't think should deter any capex cycle or, for that matter, a growth of a country. So I would not really worry too much about any inherent issues which we may be having. It's more to do with the global markets.
Okay, so when we are looking at the inherent sort of picture, Mr. Bajaj, the latest Oxfam report. Now, I know that in some circles, Oxfam is seen as perhaps reflexively opposed to India in that sense, and there are many people who will say that. But let's for a moment take it at face value. The Oxfam report notes that India's bottom half, this is a very interesting but also alarming statistic. The bottom half pays 2/3 of the GST, total GST. While the top 10% of the people pay only 3%. Now, how concerning is such a disproportionate burden of tax?
Rahul, I would really like to see the data first before one comments on a situation which may not be appropriate. So it depends on how we understand that. Because if you see, tax is directly related to consumption. So are we saying that 2/3 of your consumption is coming from that bottom segment? And only 3% from the top. So to be fair, I would like to see the data before I answer. But just taking a stab at what you were asking prior to this, when I look at some of the broader data, long-term funds are still very much invested in India. What we have seen with the stock markets, we saw them peaking a year ago, and we are seeing some shift of money that has happened towards the developed economies of the world as they've taken their interest rates up. So it's the short-term money which I believe has moved out at this point of time. And short-term money, wherever it gets short-term return, because by definition those funds are mandated in that manner, will keep moving around. We, of course, want all the money that can come to India to come to India. But I would look a lot more at where the long-term funds are investing. And as we see more opportunities for capex over here, I have no doubt that the long-term money will continue to come over here.
Well, how is the government attracting this? What's your take, Mr. Bajaj?
Number of issues. One is, you're just creating greater demand. So this significant increase in public capex the last few years, and we hope that continues this year as well, is creating more business. It requires more material. It requires more employment. That creates greater consumption. We are a huge domestic consumption economy, and anything that provides tailwinds to that will have a multiplier effect. Second is just the ease of doing business. We are seeing that the government is very clear that they want to move forward and keep decriminalizing business-related laws. And CI itself has submitted a bunch of such recommendations, and we are working for even more. Third, if you see, is looking at the next 10, 15 years, the fact that India can provide additional manufacturing capacity to the world. You have the PLI schemes that have taken off already, and we have suggestions for more, including some linked to employment. Fourth is that, like the GST Council helps to sort out issues between centre and the states, CI has recommended similar councils for other issues, land, labour, water, electricity. This is something that is still pending. If we are able to find a way for the centre and the states to collaborate, to bring money in, because eventually everybody benefits in this case, it's a win-win. We will see that much additional confidence in investors, domestic and foreign, to continue to invest in.
Now, the reason I picked up on the Oxfam figure, Mr. Banerjee, was to sort of talk about disparity. Obviously, it's a figure that will need closer examination, and people have already commented on perhaps the fact that this may not be robust enough an estimate or what have you, but I'm not going down there right now. There is obviously disparity. Indian household core debt, for example, has gone up by 1% between 2017 and 2022, while the Indian government's debt has gone up from 16.9% to 82.4% during this period. And we are talking about, of course, in GDP terms. Now, how do you comment on the trend vis-a-vis benefits, for example, given to the corporate sector?
So this is, let's put aside a report which we probably need to debate a lot about the data of it. But your question is very fundamental and it's relevant and extremely important. And therefore, one of the things that we have said, say to begin with, is to look at, to not just to boost consumption, but also to deal with issues like issues like inflation. How do we sort of give greater leeway through the income tax benefits to the less privileged, to the lower income group? That's one. Second, I think there has to be a phenomenal focus in the budget on employment generation. That's going to be very, very critical. We need to do that. Growth-oriented sectors, PLI schemes, infrastructure, even what we had talked about, introduction of an urban employment guarantee scheme, which is going to be very critical, like based on the principles of the employment guarantee, which is enshrined in the Manrega. So that's one area that I would think which we should focus on. How do we get the rural economy, the backward districts? That has to be focused upon. That's a very, very critical area. Promotion, say, for instance, of rural entrepreneurship, facilitating integrated rural entrepreneurship cells. Why am I talking about entrepreneurship in rural areas? Because that will really generate employment. That's how you can pick up when we talk about the K-shaped and people going down. Promotion of digital healthcare, because we need to reach that benefit to the last section of the society. I would really like to see more in the budget on the digital healthcare side of it, digital education. So using our technology to really focus on for those who are less privileged. One of the things that CII has been saying is that we should actually, over a period of time, take away the SOPs that you give to corporate India. Take that away gradually and take that away quickly and really focus on infrastructure. That will create employment, that will create your issue of K-shaped recovery.
Well, that's very interesting because obviously there is pressure from the fisc at this moment. We've obviously come out of COVID. There has been government spending, and that has led to some of our targets sort of going haywire when it comes to fiscal consolidation. And you're sort of arguing in the sense of saying that SOPs to India Inc. should be sort of pruned a little bit. Mr. Puri, do you agree with that? Because, look, already there is talk, and I don't want to bring in politics too much, but the opposition says that this is a government that only services corporates, in particular two big ones, the Adanis and the Ambanis. You know what they say. How do you see this, actually? First, as a criticism, and secondly, as perhaps a rationalization of the SOPs that are being given to corporate India?
So let me first start by saying that I think CII also recommends that the glide path of fiscal consolidation is important. So it is within that space that the budget should operate. That's the recommendation, right? Certainly, the broad principle that CII is advocating is certainly inclusive and sustainable growth, an investment-led growth, investments in infrastructure, investments in social infrastructure, digital infrastructure. It's an investment-led growth that is being proposed. And India has to strengthen its footprint as far as, for example, manufacturing is concerned. And to kickstart manufacturing, ultimately manufacturing will have the most multiplier impact on the economy, right? So that is the idea, to give the impetus to infrastructure, whether it's through the PLI scheme or whether it is through rationalization of the corporate tax to make it more competitive. Ultimately, we must recognize that global capital also will flow to places where it can flourish and multiply. And India has a lot of the enablers in place. This kind of gives the multipliers. This gives the impetus. And once manufacturing comes, it creates jobs. That's how the economy has to progress. And anything, of course, as a principle, we have also said that anything that is non-productive, please don't do it. But we do find that, PLI, the results are there, investment is happening, jobs are getting created. Can we now take it to sectors which are more employment intensive, whether it's footwear, whether it is apparel or toys, those kind of sectors. So that's the whole idea, is to direct it towards purposive investments. And yes, there is a role also of providing support to those people who need it, like the distribution of grains has been made free this time. I think these are also required. So the whole idea is about the right balance between the two. But certainly anything that is a non-merit subsidy should be done away with. right? And ultimately, the economy will go on a trajectory of inclusive and sustainable growth when we become more competitive. Indian consumption demand will continue to grow as jobs gets more created. It will flourish even more, and as we get more competitive, we will have a better participation in export markets, which will really create a virtuous cycle. That's what it's been. I think that's really the focus. And the other focus of the government is also around where support is being given on a very critical area is sustainability. The transition to net zero. There is impetus being provided to, the green economy. And that is required because ultimately this puts a lot of risk to the economy. Similarly, we need to put some resources into adaptation. And it's very important, for example, even for agriculture. Agriculture is the most vulnerable. So if you see I think the components of the budget and the strategies of the government are very clearly thought out, and it reflects consistency. It supports the very clear purpose of, sustainable and inclusive growth. We have seen the manner in which water connections have galloped, the way that electricity connection has reached the last mile, the way roads are reaching the right mile. That's empowering the economy. I think all of this has to be balanced, and all these components put together is what is going to propel the economy into a better trajectory of socio-economic progress.
Okay, my final question, we're running out of time, goes to Mr. Dinesh. Mr. Dinesh, yes, obviously we all want non-merit subsidies, colloquially called ravery by the Prime Minister, to be cut. But this is also an election year, or at least we are, anywhere between less than 400 days away from the general election. It's probably the last budget of this government. Is there room for populism, or is the Prime Minister and his council and the finance minister, are they going to be extremely pragmatic? What do you expect?
I think the past maybe speaks for the future, right? So if you look at this government, I think they've been very steadfast, irrespective of what election comes or does not come, to stay the course from at least the budget is concerned. I think my view is they will continue to do that. And I think as CB rightly mentioned, there would be some support schemes which would come. And I don't think we would deem it as populist, at least from an industry perspective, because they actually help the economy to kind of lubricate the economy. So at least my view is I definitely don't expect any significant change of the course into something which the Prime Minister deems as, rewarding culture.
Very finally, is there disappointment that we haven't actually been able to meet our divestment targets, Mr. Dinesh?
No, I think there have been significant actions taking place on that score. So we do know that it is a very difficult factor time-wise. So I think the intent seems definitely there. So the way I would look at it is that I'm not disappointed. I see the clear progress forward on that path. Of course, we do want it to continue to happen.
Mr. Banerjee is raising his hand. Yes, final word.
But I found it to be a very interesting question. I would think that in the forthcoming budget, there should be an aggressive focus on privatization for revenue augmentation. And to achieve this, the responsibility and authority for the identified PSUs, we have to have very strong targets.
Not wanting to come across as populist, then perhaps it can consider this one area which will open up avenue for revenue creation. And then, of course, that can all be sort of recycled back into the economy and help with both picking up demand and obviously lubricating the engines. Thank you very much, gentlemen. It's been very nice speaking with all of you. Let's look at what the budget will have to offer in a few days. Thank you very much.